Hello guys, welcome to the Trading Parrot. We get a FOMC meeting in less than 7 hours at the time I'm recording this video. There's an expectation of 97.9% of no change with only 2.1 of a potential ease. In today's video, I want to cover a bunch of things that are happening under the hood people are not seeing. I assume if you're watching this video, it's because you want to know all those insights that you cannot find anywhere else. For example, I want to cover what's going on with the ratio of the whales. Are they selling? There's been a massive shift in their activities of accumulation just in the past day, and I suspect this has a lot to do with the FOMC upcoming meeting. I want to cover the status of the relation between the liquidity injections globally and the price of Bitcoin, which has been leading whatever happens to the price of Bitcoin in the past years. I'll give an update on the daily time frame. Pretty cool price action we are seeing. We nailed this move on the daily to what RSI was telling us, 43.772 by the dollar or target, defined by this range here. I'm also going to give an update on the sell that I posted on Twitter based on RSI 4 hour. We look at where the liquidity is located. Leverage squeeze is still printing sell, so it's going nuts. The VIX SPY 1 indicator that I currently have featured on TradingView in multiple time frames has been flagging a sell event. I'm also going to reserve this very special chart at the end of the video where I'm going to show you how you can use the volatility on the S&P 500 index to forecast all these events of crashes in the market. And currently we are forming one of these patterns, so I want to cover that as well. Make sure you're watching the video till the very end, subscribe to the channel and enable that notification bell so you get notified every time that I publish one of these videos. And there are two things that you can do to help this channel really if you want us to continue publishing these updates. Watch the video until the very end and do not go anywhere without leaving a lovely comment. That's really helping the channel. As you can see, all we need today is 2 more subscribers and we make it to 30,000. Thanks so much for helping the channel. I want to remind you as well that in the description below you have access to trade on any of these bots for free. You'll find all the instructions and you'll be able to see the performance and the description of each one of the bots. If you go to any of my videos and you scroll down to the description, you're gonna find as well amazing offers to get discounts on all my favorite services across crypto. For example, you have discounts on 3 commas. You can even join my community and get some of the higher tiers by opening an account on OKX. You have bonuses for 30,000 on Bybit, for 60,000 on OKX, and many of the indicators that I use to look into the liquidity are all featuring big discounts as well. Alright, so let's get started first with the whales. This is extremely important and I suspect this is absolutely a reaction to today's FOMC meeting. Literally, it's happening one day before. If you're unfamiliar with the Big Whale Explorer, it's showing a ratio between the deposits and withdrawals, specifically from large whales. And that's why it's so important, because we monitor what the whales are doing. Usually they lead us into good moves, not precisely on the same day, but they tend to influence where the price is going to go next, just because of the magnitude of their movements. We use an MA here that is giving us a relative value to know when we are below that MA, we know that we are in a potential opportunity for accumulation if we want to mimic what they're doing. When we go above the MA, or when we even go above the ratio 1, which means that deposits are equal to withdrawals, and if we are in red, it means that there's a lot more deposits, which usually leads to whales dumping in the market. That can initiate a cascade of liquidations, a long squeeze, or maybe just some sideways action, at least some bearishness in the market. And this is not just because of their own actions. Let's face it, we are not the only ones that are monitoring the whales and mimicking their moves, which makes even more relevant to keep an eye on what's going on. So currently we have reached a ratio of 1:14, which means that at least there is a 15% more of whales that are depositing into exchanges. And I suspect some of them have already sold some stuff. And if you wonder if this necessarily needs to mean a massive move to the downside, downside, you can see here that we made it to 118 instead of 113, and we have a pullback of 8%. In here, we made it just to 1 and we have a 6%. But in here, we had 158, which is considerably a lot more than where we are now. And it took a while, but you can see the consolidation followed by this dump. So there is some correlation, and I personally do not like to be accumulating when they're distributing, because literally they are dumping on you. In regards to the global liquidity, I keep this chart very close to me, and I don't let more than 1 week passing without looking at what's going on with the global liquidity. If you're doing longs, literally it's very difficult to profit if you're doing some swing trading, if actually the liquidity is draining out of the system. What you want is new liquidity entering, good injections. Like for example, all this area here, you can tell that there was liquidity during COVID. They had to print a lot of money, and that's evident here, and not just the US, but globally. And when we had this dump here from almost 64 to a bottom of 28, you can see how little liquidity was being printed, and this is what caused the crash. Yes, there are technical analysis, there are signals, there are divergences, but all of them are a reaction to a lack of liquidity. So if you want the official source of the crash or the movements of Bitcoin, look no further than global liquidity. You can find this indicator. It's called PBOC liquidity injections by Tech Talks Macro. I suggest that you follow him on YouTube and on Twitter as well, and that you have a look at all his other indicators on TradingView. They're really useful. So as you can see, the liquidity comes in waves. Here we have wave 1, 2, 3, 4, 5. Currently, we are within a wave of injections of liquidity, but you can see at the same time that this seems to be a top of that injection. Second thing that I'm noticing is that if we put a horizontal line here, each of these injections has been significant, but nothing compared to the injections that we currently had. So even though we are in a depression here at 210, that depression is still above the previous maximum, the previous highs of injections that we have in the previous 4 waves. So yes, we are coming down in liquidity injected, and that can take the price lower, but we are still higher than many of these highs. So it's kind of a new scenario that we haven't seen before. Obviously, it will be much easier to conclude that we are going down if the injections went below any of these heights, and then the conclusion could be more direct to say, yes, we should be dumping right now because the liquidity has drained too much. We are in a year that there are elections upcoming, and of course people want to impress the voters, at least in US. So from that side, that tends to sound bullish to me. Let me know in the comments it also sounds bullish to you. I suspect that the S&P should continue running for quite a while, but I'm gonna show you also some patterns later in the video when we cover the volatility index and the relation with each of the crashes that we see in the market. That's also going to give you a counterpart to not just be biased purely to the liquidity, because there are many aspects that influence the global macroeconomy, even though this is one of the biggest elements to monitor. Let's go back into the fun stuff. We're going to look into the 1 day and 4 hour setups currently. During the past week, and I could say maybe in the past months, we've been looking at all this channel going up and then the channel coming down. And we were expecting, as I left these drawings here, to pay a visit to 60 RSI. Even though you can see that the RSI made it to 55, that is based on the close of the candle. If in the RSI, I replace the close with the high, at some point during that day, we made it to RSI 59. And if we look at the reverse RSI, you can see that I have a value of 58. That was my expectation a few days ago. And let's see how close we got to that expectation. We literally made it a few dollars below the expectation based on this hypothesis that we had to pay a visit to the top of the channel. That was very difficult to believe when we were here below, thinking how come we're gonna make a full move to this area. But yes, these are very likely movements. Sometimes they don't play out, but most of the time they do. And here's another example that we did it. There's actually a fair value gap here. We should have made it actually to the middle of the fair value gap. That's another model that we use very often. But in this case, the RSI was again the one more accurate. I want to give you my thoughts on what could be next on the daily. It all depends on the FOMC, how people react to the FOMC. If there's some bullish interpretation of the FOMC right after, it's very likely that we pay another visit to RSI. In this case, it's going to be 57 because the channel is coming down. So we need to update this value to 57. So we could make an attempt to break 43.7. That will be around here. If things are interpreted as very bullish, potentially we can try to break this yellow line. If things are disappointing investors, this will be interpreted as another rejection of the resistance, and we could make another trip to 34 RSI, which is the bottom of the channel once again. And let's update this number to 34. That's going to be the color red, and 34 is located at 37.8. So for that, we need some catalyst that is bearish enough to make that move to the downside and to completely cancel out the chances that we attempt the breakout on the top side of the channel. I hope you're understanding more or less what are the patterns and what are the ways I interpret the RSI. This is just a simple RSI and I'm just overlapping my own drawings on top of it, and it offers divergences, but nowadays even the out-of-the-box RSI version on TradingView can give you divergences as well. Not to mention that I got really good at seeing the divergences and spotting them. I just have them there so you can also see them. The setup on Ethereum versus Bitcoin, which usually drives where can we go next with the alts, is still in a place that looks like a retest of the breakout. We were thinking that we need to come here. Well, we made it to 42, so close enough. Let's see what's going to happen next with Bitcoin. Obviously, if there is a larger pullback on Bitcoin, that could cause some damage to this setup. As long as we remain above 40, above 38.5, still within this range that we had in the past 2 months, this could still have some room to retest properly and continue the way up. The dominance seems to be here from one side pretty bullish because we are at 52.5, but we still haven't managed to break the white line of resistance, which could be meaning that we are due for another move to the downside. The only thing that remains bullish is that we have conquered this level where before we got rejected, and in here we are not getting rejected, and in fact we are above this. So there is kind of halfway bullishness and half bearishness. It's not really clear to me what is next with the dominance. If you have spot some cool pattern on the Bitcoin dominance, let me know in the comments. On the 4 hour, if you're following me on Twitter and you have the time to read all my posts, which I'm pretty active, you probably know that we were here right at resistance. That you can tell by the price. I'm using here an indicator to show me these blocks, but since I focus mainly on the RSI, you can see that we have drawn here this resistance, and that's where we made multiple attempts here to break out, and we even were above the range, and now we re-enter, which is pretty bearish, and we also broke this level all together with price resistance and a hive on the 4 hour signaling a sell with a target of 42.2. We have been very close to fulfill 100% of the target. Hive is usually not lying to us, so the question is whether this can continue coming to the downside. I feel like currently it's a lot about what's going to happen on the FOMC in that meeting. For the time being, we are above the CPR monthly pivots, which is definitely going to provide some temporary support for the price just to chill there in the expectations to hear what's the outcome of the meeting today. But if there were some movements, and I expect to see some volatility after the meeting or prior to the meeting, we have still this fair value gap located at the top. Remember that the middle line here at 44.7 is usually very attractive. So if the price wants to take that for a breakout to the upside or for a fake out, remember that most of these FOMC meetings, they have an initial movement, which is the fake out movement to grab liquidity from you, to trap traders, and then very oftenly it ends up going in the opposite direction. Leverage squeeze, which is a signal that has proven to be extremely accurate. We're talking about above 90% accuracy, has been screaming all this move starting from 41 and reaching almost 44 that this is a sell, that there's too many longs in here. And historically, when that happens, there tends to be some sort of pullback. If you've been watching my videos for a while, I cover extensively the performance of the signal. If we look at the weekly chart, we can see this candle here is extremely bearish. This one here is bullish. But right now we are printing another one that is mildly bearish. In my opinion, what we need to achieve is a breakout above these higher closes, preferably closing above 44 on the weekly. Similarly, if we close below 41.2 on the weekly, that's also going to help people confirming that we are due for a move to the downside. So far, this is looking to me like another bull flag, which 2 out of 3 were straight continuations to the upside. If you focus on this one, we didn't necessarily go straight up. We actually have a dump first before continuing to the upside. So whether this is just going to be something like this and bouncing there, or coming down here, trapping some people and then coming up, that is something that no one can forecast with 100%. There's still some chances that we can come back here purely based on past performance. VIX Spy is one of my free indicators that you can find on TradingView, and is printing buy and sell signals on multiple time frames based on the volatility index combined with technical analysis. Here you get all the signals telling you to slow down here, same at this top and this top, and you also get a signal here to re-enter the market. On the 4 hour, still we don't get any sell signal. We just got some buys here that were also pretty accurate, but on the 1 hour we are starting to see the first sell signals precisely at the top. So this whole area here is very interesting because it's full of leverage squeeze signals. We have plenty of breaking point sell signals as well. We have market ciphers, divergences, RSI divergences. We have resistance here. So there's a lot of confluence, but you know how this works. If we have a dump, we're going to have all the narrative ready to confirm that that should have been the point to sell. But if we break out to the upside, there will be also some indicators on the weekly confirming that there should be a continuation to the upside. Because trading is never perfect. It's just about probabilities, and it's very difficult to measure those probabilities in a quantitative way so you can actually make decisions. But this next pattern I'm going to show you is something that if you are in the market or you're planning to enter the market, is something that you cannot ignore. What you're seeing here at the top is the volatility index, and in a way is measuring the greed and fear in the general markets, specifically the S&P 500. Here, the higher the value is, it means that there is more volatility, and volatility usually spikes more when there's a dump, because we rarely see a pump on the S&P. The S&P moves very slow to the upside, and it tends to have these dumps that can move pretty quick. And that's where you see these spikes. So each of these spikes is most likely a big pullback retracement in the history of S&P. And the way this works is by accumulating energy into these patterns, in these triangles, until you get a squeeze of the volatility. So you start with a spike, which is one of these dumps, and then you start having smaller dumps generating these lower highs on the volatility index. Once those moves are too small, in other words, the corrections start becoming like mini corrections, the chances of a large correction increases exponentially. So as you can see, we get the same here and the same here, smaller dumps, and smaller dumps, and when the final dump is too small, then you get a top and you get a massive move to the upside. Where are we today? We are building a very similar pattern, although this one didn't create a massive wick to the upside. It was quite humble in terms of volatility, but still the move was decently sized to the downside. It was 26%, but still we have lower highs on each of these dumps are smaller and smaller and smaller. So what I'm expecting to happen is potentially to be accumulating here some smaller dumps, but the smaller they get, if you're looking to the other side and not paying attention to this, eventually you can see one of these wicks just like that. And usually if you see something this big, that means a dump like straight away like this. From COVID, we haven't seen anything decently sized. Before COVID, we had one on the 30th of January of 2018. So if you are in the market, if you're DCAing, if you're holding assets, this will be my area to keep focus on. All right, guys, I hope you enjoyed this video. Do not forget to have a look in the description at the bots that I'm currently publishing. If you have any questions about the bots, please contact me. You can leave me a comment down below, or you can also contact me in my Discord channel. The link is also in the description. On Thursday, we are going to have an AMA that anyone can join on Discord for free. So make sure that you're already in the server, RSVP, so you don't miss the AMA. Typically, it lasts for about 1 hour. People join, we talk about bots, we talk about different things that we can add to our indicators. People bring their own setups, and I try to get some feedback as well if I can contribute. You can find in the description the link to Discord, Telegram, Twitter, TradingView, along with all the discounts here in the description. All right, guys, see you on the next one. Take care. Bye-bye.